All right, good morning to you. I am Mr. Matt Gouget, Matt the Mortgage Guy. I've got with me Nash Paradise, the Loan Wizard. This is the Monday Market Update, where a couple of guys who are actively involved in the real estate market bring to you our hot takes. Nash is going to help us, create some clarity around some of the economic data, how that affects mortgages, how that affects real estate. How you doing, Nash?
Doing well, Mr. Gouget. Thank you very much for the warm introduction. Let's dive right in and talk about what happened last week, because I think last week was kind of wild in that the economic data didn't matter. Is another week of that. We talked about this last Monday, like, hey, let's see if things settle down enough to where the economic data is actually going to make an impact. And it didn't. What did make an impact were Trump's comments on Fed, Chief Powell. So said he wanted to fire Jerome Powell, then he walked that back. Oh no, Powell's okay. Okay, so what happened? The week was fairly stale, and then we get to Thursday, Friday of last week, and markets want to rebound. They want to get a little bit stronger. There's still a lot of uncertainty right now. What I'm hearing, like the whispers on the street, is that traders want a little extra margin in the long-term yields on like the 10 and 30-year treasury bonds, because they're still not sure whether or not our administration is trying to weaken the dollar so they can pay back their debt cheaper. It's kind of an unknown right now. So looking at last week's highlights, we had our continued claims, we had a bunch of consumer sentiment stuff. Nothing really mattered. It didn't make any kind of impact at all. So, we're still, we could replace this with tweets from last week, the way things are going. What are your thoughts on last week's development?
Yeah, it was interesting to see, all it took was something that essentially said, no, my intention isn't to fire Jerome Powell. Whether or not, that was going to be something that was possible or he could do wasn't the point. Just that kind of friction there. The markets reacted in a certain way. And then, of course, on his backtracking of that, you see markets rally. And so I think there's a couple things. One, we look at how this affects actual mortgage bonds and mortgage rates. And two, and in my opinion, the more important thing is all of this tariff negotiation, all of the stuff that's going on really, really affects consumer sentiment. And that's where, all these conversations I had this weekend where a real estate agent says, this is a beautiful house. And like, it's hard to get in this neighborhood under $1 million. There's no reason this house should be on the market for 24 days. But you insert a little bit of economic uncertainty. You insert, trade wars and some of the stuff that's going on. It's just enough to give consumers the uncertainty needed to say, let's wait. Let's wait until all this stuff is behind us. And I think there's a lot of consumers doing that. So that's kind of the effect that I'm seeing. I don't know if you're seeing the same in the markets that you're working in, but I had a lot of interesting conversations this weekend around that.
Very much same. I mean, we're seeing that across the nation right now. I mean, it's a combination of affordability is fairly poor, home prices are still fairly high. There's a mixture of limited inventory and fewer buyers in the market. You throw all that on top of economic uncertainty, not knowing where things are going, and huge swings in the stock market, huge swings in the bond market. This stuff is impacting people's everyday living. It's, page one on the news cycle. So yeah, that's just getting into everything. Let's talk about what's going on this week. Normally, I would say, hey, this is a huge week. I mean, you can't even see what's on here this week. You'd have to blow it up, but I'll point out a couple things that we find pretty interesting here. HFA, I'm going to say that for a fourth time. FHFA, Home Price Index. I care about that. I find this very interesting. We've got our month over month and our year over year increases in home prices that we're going to see Tuesday morning. The forecasts are kind of interesting on this, only forecasting a 10 basis points increase on the month over month, which means property values are holding fairly steady. I actually thought they'd be going down a little bit on a month over month, but I'm curious in the year over year. The previous year over year rating was a 4.8% increase in home prices. I'm going to be, we're going to see where that is. This is the February year over year, so it may not have fully caught up to everything that we're talking about right now, but I think that's going to be interesting. Other hot topics this week. Wednesday, we got core PCE. It is expected to come all the way down from a 0.4 previous on a month over month to 0.1. So inflation's dropping. Here's your takeaway. Inflation should be coming down. That is what's anticipated. The year over year, same thing, from 2.8 to 2.6. So Wednesday could be a really big day in moving the bond markets. Also, none of it could matter with the right tweet. So take that with a grain of salt. We have a third big day here. I mean, you can even argue that Thursday's ISM manufacturing PMI data is kind of important, but it doesn't move the bond market the way Friday will, because Friday is jobs day. Non-farm payroll, employment rate. Non-farm payrolls are projected to come in way lower than the previous rating. We had 228,000 jobs added in March. We are forecasting 135,000 in April. And I know this has probably given you, some deja vu, Matt. Last time we talked about jobs numbers missing severely and how it turned up the market. Do you think we're primed for another big miss, or do you think, hey, April non-farm payrolls are just going to be that much lower?
You know what? I really can't say one way or another, and I feel like I'm going to swing and I miss if I do it. But the thought that was coming to my head is, without the political stuff that we know is having a huge impact.
Did we lose Matt? Did you just freeze up on us? I got a nice, beautiful frozen Matt.
Data. I'm back.
All right.
And so we'll see. Maybe the political stuff is quiet this week, and this stuff has huge impact like it has in the past, and like it should, because when you talk about inflation numbers going from 0.4, which annualizes to 4.8, to 0.1, which annualizes to 1.2% over a year, like that's huge. And that's something that would be a pretty big market mover. It would, if we didn't have any of this tariff stuff going on, then everybody would be talking about, inflation's under control. The Fed is going to start chopping the Fed funds rate, and mortgage rates and interest rates are going to follow. But to your point, like you've been reiterating, the political stuff is outweighing all of this news currently. So it'll be interesting to see what comes this week.
Yeah, that's a great segue into, let's see what's been going on with the Fed fund stuff and where we are on here. So this chart's always fun. When we were talking last week and the week before, we're looking at 3 rate drops this year. The blue on here is where we have a consensus, where most things are going. So, I mean, Caden, if you want to take your little marker here and just kind of follow me, here in May, we should be staying the same, 93% on the May 7th meeting, unlikely to have any kind of drop. Here in June, this is where we're seeing a highly likely first interest rate drop, 66%. So one drop by June. By July, this is the interesting one right here. When we were talking last week, And I think the week before, we were almost looking at back-to-back drops, which I don't love. I think that tends to move things a little too quickly, and we see stuff that, we actually see mortgage rates tend to go up when we do back-to-back drops like that. So we're kind of split here on whether or not we see that. And, the consensus today is most likely not that second drop until September. Now we look at September, we are basically assured to have that second drop by the September 17th meeting. Moving forward, wow, look, we've got 1, 2, 3 drops now by October, and that one 85%. Basically, it's pretty heavy. And then the other thing that we were talking about last week and moving forward is, do we get a fourth drop this year? Looking at the 12-10 figures, split. I think almost everyone now is feeling like by the January meeting we should see that fourth drop. But 1, 2, 3 without a doubt by October. Thank you, Caden. I'm good here. I feel really good about those 3. Do we see a fourth one, and does it matter?
Yeah, it's interesting because we're split now. So if you had to put a number behind how many Fed rate drops are anticipated as of today, as of this chart, you'd put that at 3.5.
3.5.
And it's wild how it changes. And to your point, the Fed could cut the Fed funds rate. And does it matter? Do mortgage rates follow? Man, it feels like weeks ago when this was down to, we might not even see 2 in 2025. Now we're talking about 4. So I think it just shows you this stuff is fluid and can change. Economic data can come out. There can be a wind shift, and all of a sudden the Fed goes one way or goes another. But we're
went
from wait and see.
From 2 to 4 to 3 to 3.5 now. So I think what I'm going to be looking at is when we do get to that May 7th meeting, what are the politics around that? Is the president going to come out and talk about, the Fed needs to, or is he going to try to put pressure on lowering the Fed funds rate? I think that'll be interesting. Obviously, we're not really ready for that. There's still a lot of more economic data that needs to come out. The dot plot doesn't support it, but we are definitely trending in that direction. So that's just something neat to watch ongoing and use as a conversation starter, with our clients and our partners. But speaking of conversation starters, let's talk about what everyone's really here for. They want to know, where are mortgage rates going? What's been happening lately? And man, we've been up and down and up and down. It has been a wild 2 weeks in the mortgage market. Just to explain what we're looking at here on the blue line, the overnight average as of this morning, 6.84%. It's 30-year fixed, nice size down payment, high credit score. There's some costs associated with that, but that's a really good representation of the entire industry average across the country. And what we're really looking for are, what are the trends? Are we going up? Are we going down? Where is there room? Are we getting resistance? And, since we were back a few weeks ago and in that nice 6.5, 6.6 range, and we started to see the markets picking up, then we get the April 2nd tariff announcement. Things start to shoot up, they shoot down, and now we're just back and forth. But man, with lots of volatility, what's your take on the movement in the mortgage rate market here in the last week since we've talked?
Yeah, so we've got a little bit of pullback, which we always do. We saw this 6.6 to 7.1 uptick during those first couple weeks, or really the first week after tariff announcements. And, that freezes the market. And like we've said it here many times, anybody who's followed, anybody who pays attention, there is a direct correlation between mortgage interest rates and mortgage demand. Mortgage interest rates go up, demand goes down. And so there's hundreds of thousands, if not millions, of buyers across the country. And I know, because I have a sliver of those, a couple hundred, that are somewhere in this process where they've gotten themselves pre-approved. They're looking, they may or may not buy, they're able to buy, but are they willing to buy? There's a lot of different factors. When mortgage rates go from 6.6 to 7.1, of those, call it 200 that I might have pre-qualified, a certain percentage of those are just going to say, you know what, I'm going to press pause. One, because of interest rates, and two, because of just uncertainty you know, in the economic climate and political climate. But as they come down, as they've rebounded, that, you know, buyers come wandering back and they go, oh, you know what? I see that rates have come down. And when I looked at scenarios last week at 7.1%, my payment was this. Now that rates are 6.8%, I'm saving about $150 a month. Maybe a house comes up and we go out there and make a run at it and make an offer on it. So if rates continue to kind of draw back and go down, it will be a good thing for demand. It'll get more buyers moving, and it's the time of year where a lot of buyers are moving anyhow, because the spring and summer is when the most real estate transactions happen. So it'll be interesting to see. Right now, the overall sentiment, in my opinion, is one of, like you said, I think last week you said it, Nash, it was really well put. Like, it's the great pause. A lot of people are on pause.
Yeah, I couldn't have said it better myself, even if I did say it last week. I feel like your breakdown, your synopsis here is very much aligned with my final thoughts. We are in this pause, but I'm shifting from the great pause to cautiously optimistic. Where we are with the 10-year Treasury yields at the moment, there is plenty of room to support this to continue to drop. People are watching things aggressively. We're seeing bonds starting off at the same levels that we finished last week, which is great. That should lead to mortgage rates settling down and dropping. You know, it's a slower to drop than it is to go up. So, you know, maybe that's the mortgage guy in me talking, and maybe it's just wishful thinking, but I do feel like this is a week where, as long as we don't get any major any major political commentary, the economic news could shine. Like you said, it may be muted and we won't see the same kind of severity on the movements that we would normally see with this kind of economic data. But you know, my projection for this week is cautiously optimistic. I do expect rates to come down a little bit as the week goes on, so long as we can avoid any major political commentary. That's where I'm seeing things. And, you know, we'll have to come back next week and see if I was right.
Yeah, I'm looking forward to it, man. We will be back next week, certainly, to review what happened and see if Mr. Nash Paradise, the Lone Wizard, was correct. Thanks, brother.
Awesome, man. Take care.